Disney stock is on the rise ahead of its fiscal fourth quarter earnings release out later today. Investors will be eyeing its Disney Plus subscriber numbers, but overall, the company has a lot of levers to pull. Here with more on that quarter is Yahoo Finance media reporter Alexandra at Canal. Allie, good to see you here. What should investors be locking in on? Is it the theme parks or is it Disney Plus?
I think a big focus for this quarter is going to be on subscribers and profitability, right? Last quarter, Disney did guide that Disney Plus will start to turn a profit by September 2024. So investors are going to want to see if they're on the path to that trajectory. Last quarter, Disney reported a loss of $1 billion in its direct-to-consumer division. So that is going to be a big focus for this company. In terms of the subscriber numbers, Wall Street expects additions of 9.35 million after a surge of more than 14 million in its third quarter. Disney, of course, will be rolling out that ad-supported tier next month to compete with Netflix. It's raised prices across the board, and amid those price hikes, average revenue per user is expected to come in roughly at $5. But you did mention the parks, and that is an important element moving forward. I think the parks, not that they've been ignored, but they really haven't gotten the recognition that they really deserve since everyone has been so focused on DTC and subscribers. But the parks has really been a lifeline for this company, especially after COVID-19. They've recovered quite nicely amid new technologies, increased prices, more attractions at the theme parks, really luring people to come back and utilize the parks overall. Revenue within that division expected to hit $7.59 billion in operating income, which has consistently been an important number for the parks. $1.9 billion is the expectation. Now, that's less than what we saw in its third quarter, but potentially parks could be hit by Hurricane Ian, along with those various macroeconomic headwinds that all of these consumer-facing media giants are experiencing right now. But I do want to say that a lot of these companies have been hit by their forward guidance. So it's very, possible that Disney could have a strong quarter, but if they guide that worsening macroeconomic conditions are on the horizon, if they lower estimates in any way, that could very well trigger a sell-off.
So when we think about the Disney versus Netflix subscriber battle, is it clear right now who was winning on the paid front? Because Disney had subsidized so many accounts early on just to try and ramp up some of those subscriber numbers.
Right, I remember you had that 1 year free if you were a Verizon member. Yes, and that has been a big focus. I've seen a lot of that chatter on Twitter right now. I think we're going to need a little bit more time to figure out who really is a subscriber winner. I do know that Disney has made a lot of investments when it comes to Disney Plus. I was at D23 in September, and it was overwhelming to hear all the new programming that's coming specifically to Disney Plus. This is just exclusive to that streaming platform. We have Marvel, we have Star Wars, we have exclusive films like Hocus Pocus 2, Disenchanted, and that is really going to help Disney, I think, moving forward. They have finally banked that content. They have that really strong IP. So hopefully that means costs are going to come down. And again, profitability just continues to be a focus now for a lot of these streaming giants.
You had me at Pixar.